Hey, Fidelity, how can I remember to invest every month?
With the Fidelity app, you can choose a schedule and set up recurring investments in stocks and ETFs.
Oh, that sounds easier than I thought.
You got this.
Yeah, I do. Now, where did I put my keys?
You will find them where you left them.
Investing involves risk, including risk of loss. Fidelity Brokerage Services, LLC, member NYSE, SIPC.
Hello and welcome to All Indians Matter. I'm Ashraf Engineer. Artificial intelligence or AI is the buzzword across industries. From manufacturing to logistics and healthcare to marketing, it is shaking up the status quo. The personal finance and investment industry is no exception, and AI is transforming it by improving strategies and research, and thus investors' decision-making abilities. AI empowers investors through data analysis, market predictions, and even portfolio management automation. Alongside, it is offering a more efficient and personalized experience. Essentially, AI platforms process massive amounts of data and use advanced algorithms to forecast market direction and provide investment plans in a time that humans simply cannot match. However, there are also serious concerns about malfunctions, poor results, and the increasingly crucial question of security.
All Indians Matter.
We have on the show Rohit Jha, co-founder of the ArthAlpha platform. Rohit is a techie by education, trader by profession, and entrepreneur at heart. He previously built and scaled a trading vertical from scratch to a $200 million annual profit and loss organization. He managed a team running a book of more than $2 billion and was one of the youngest portfolio managers with independent capital allocation at Tower Research Capital. He actively advises and consults on quantitative strategies and risk management systems. Rohit, welcome.
Hi.
Rohit, technology has down the decades played an ever-increasing role in institutional investments, but how is it shaping personal finance and investments today?
Technology in personal finance has come a really long way. I was talking to my co-founder and he was telling me, as a kid then, that back in around 2002, ICICI brought in its first product to allow people to invest in markets directly via an app. And then a host of other apps like Sher Khan and others came up. That made it very easy to book FDs, buy stocks. Then over years, innovation kept happening. Then next set of apps came in, Zerodha, Stock, Upstock, and Grow. And they made it even easier for retail investors to start investing in stocks. Now, over the last few years, robo-advisory has taken up and it's shaping the industry in a big way. But it hasn't been all success yet, even globally and in India. But there's a huge opportunity there, and I'm just wishful that that is going to probably create a huge impact in the lives of in personal finance and in the lives of retail people.
How is it changing the nature of the individual investor?
So there is a huge opportunity here, right? Individual investors have access to data in a way that was not available before. That includes fundamental data, news, stock recommendations from analysts, top analysts, market data. And this has allowed them to be more competitive. They are able to compete with the best, again, sitting in the homes with just a few clicks. But it also comes at a cost. If you have seen recent SEBI regulations, they have been trying to curb options trading. The reason is that majority of retail investors have been losing money. They have been bleeding. And more than 90%, I think 95% have lost money. I personally know of some people, not from not so well-to-do families, who have lost over 25 lakhs. So while it has created a great opportunity and equalized the opportunity space, it has potential pitfalls that people need to be aware of. And
Rohit, as an individual investor, what are some of the things that I can turn to AI to do?
So one biggest application that I see, right, and I think this is big opportunities space for a lot of startups to take up. So I have met a lot of retail folks who want to invest on their own. I mean, they of course they have invested in mutual funds, PMSs, AIFs, but they also want to manage some of their own money. And the data is very scattered. While they have access to data, but it's very scattered across platforms. Sometimes they don't have the detailed understanding of the nuances, what each term means, what its implications are, how it varies across market cycles. So there is an opportunity for AI tools to provides to summarize it, to provide, distill it down, to put it all in one place so that person doesn't have to go to 20 sources, spend hours, and they can just get down to it, understand, and then make their own decision. Mind you, I'm not telling that you should rely on AI for decisions, but for summary, for summarization, for broad understanding, yes. There is another application which is asset allocation. Asset allocation is a huge problem, and it's not solved yet. And AI provides a unique opportunity to solve the asset allocation problem at scale in a very good way for most retail people. We are ourselves working on a product which there is a huge interest in the market for among asset allocators. We are working on it, and hopefully in the next year and a half, we should be rolling it out, which wealth managers and asset allocators can integrate into their platform and make it provide better asset allocation opportunities to retail folks.
But Rohit, how accurate is AI when it comes to market predictions and therefore investment recommendations in turn?
As I said, definitely not accurate, and you should definitely not rely on an AI system for market recommendation. We are far from it. So you might have heard a lot about AGI, and while a lot of people believe it's close, we are far from it. That's my personal opinion, and we are very far from it. So until you have vertical AGIs, what that means is AGI is specializing in finance, right? Should not rely on them for recommendations. It's just like relying on tips in a random Telegram group, in my opinion. But yes, as I said, there are other things you can look up to AI for, and you can take advantage of it.
So just to be clear for listeners, when Rohit says AGI, he's referring to artificial general intelligence. Am I right?
Yes.
Okay. So Rohit, now as an individual, if I want to use AI tools, how should I ease myself into that?
Start with ChatGPT. So I have been one of the early adopters of ChatGPT. I think I'm in my circle. I have posted, if not tens, at least maybe even 100 people to try it out, use it. That's a good place. Play around, play with prompt engineering, try to understand what it's good at, how it responds. That is a good place to get started. Then there are a lot of vertical LLMs. So LLM is a large language model, just like ChatGPT. And so vertical LLM means anything that is focused on a specific vertical. So there are finance-based LLMs which are specifically tuned to stock market data. You can go there, and there you can query more specialized query regarding market. Try to understand, if you want, some stock has this P ratio and this RSI. Another stock has another P ratio and RSI. Does that mean anything? Can I make some inferences? What should I make sense? So you can play around, if not to eventually invest, it will just give you a better understanding of the whole space.
Right. And also, Rohit, every individual has different financial goals. So how do you ensure that you are using AI in a manner that is conducive to achieving your specific goal?
See, in the end, right now, AI is not at a point where it can solve that problem for you, right? So the ideal state would be, which we are years away from it, that an AI can take all your assets, liabilities, your state, what you have bought on EMI, every single thing, right? Your goals, like education of your kids, maybe your marriage, if you're married, vacations, everything into it. And then run a complex asset allocation module, how you should allocate your assets based on what are your goals, what you want to achieve, what you want to have in your life, right? But we are far away from that. And so at this point, people have built approximations to it. And these are the solutions that one can rely to, one can look upon.
Right. And one of the views often expressed is that AI has enabled investors to move aggressively towards quant funds. Now, first of all, Rohit, what are quant funds and what do they mean for the small investor?
So, a simple difference between a discretionary and a quant fund is this. In a discretionary fund, you have a fund manager or a set of fund managers taking decisions on a discretionary basis. That doesn't mean they might not use quantitative tools or data. It's just the final call is subjective one. Contrary to that, in a quant system, the decisions are quantitative. What that means is eventually it's taken by a piece of code or an algo or whatever the term you want to use for it. Now, there is a common misconception here that AI implies quant funds or quant funds imply AI. That's far from true. AI is used by discretionary funds as well, not as actively, but I'll give an example. So, a discretionary fund can use AI to summarize articles, news, earnings, or a lot of data that is manually very hard to process across stocks, and then take a subjective call, right? And similarly, there can be quant funds, and there are most of the quant funds who don't use AI. They use, different set of tools, but nothing close to AI. In India, there are only two funds that we know of that use intelligence actively in their strategies in their fund. And we at ArthAlpha are one of the pioneers. We are one of the first ones to start using AI and machine learning at scale in India. And even when I say that, right, while we are using a lot of it, we are still scratching the surface, and we are far from what can be achieved using these systems.
Right. And Rohit, while one of the pluses mentioned is that AI can reduce human error, we are also finding a tremendous number of errors introduced by AI. How do you respond to that?
So in the end, an AI system is just a set of mathematical equations. Complex mathematical equations, yes, but it's just mathematical equations. So your output is just a function of your data and the process. Now, let's say as a kid, we probably most of us studied quadratic equations. There, the result answers were deterministic, that of a quadratic system, what you wanted. Except in this case, the results are not deterministic, it's more complex system. So it's prone to noise. So how you train it and what you train it with becomes a big function of how and what output you get. So while we might not have 100% control over it, most of it boils down to our process and the input. So garbage in, garbage out. And that stays true here as well.
Garbage in, garbage out. I like the term when it comes to what we're discussing. But but in a more serious note, will AI eliminate the need for human judgment altogether in personal investing? I'm referring to the long term. I know it hasn't yet, but there is that talk and there is that fear. What's your view?
Not in the near future, for sure. We are far away from it. So I talked about AGI, right? So I'll quickly say what AGI is. AGI concept says that a machine will be as good as a human in terms of right now machines are emulating empathy, or they don't understand what they're doing, right? While they might be good at certain tasks, the idea of AGI is that they get to a point where they are indistinguishable from a human. So when we get to a point of vertical AGIs, where you have AGIs which are trained and highly finance focused, and then you can think that they can act as a good financial advisor, wealth manager who is maybe equally good. But before that point, far from it. And I would strongly recommend people, because they should not, come under this impression that since you have, there are applications of AI in personal finance and retail investing, don't go about using it as a stock recommendation tool or for investing purposes. Just use it as a tool to help guide you, not to make the final decision.
Yeah. And there's also the ever-present fear of weak data security. What's your view of it?
So it depends, right, what we're talking about. So if you talk about, say, data for firms like us, when I say us, all of us, PMSs, AIS, and so on. So we operate in a highly regulated environment with our custodians, brokers, everyone who is highly regulated, servers from some of the best providers. So there is no security risk there. That being said, on personal front, right, the cyber frauds have been increasing drastically. New ways of scam have been coming in, and people have just started to integrate AI into the system for frauds. Imagine, if it's fully integrated, imagine the scale at which these scams will happen. So a lot of times it's because of lack of education, or sometimes just the situation is created in a way by these scammers that people end up divulging a lot of sensitive information, and that often leads to financial losses. So I think education needs to be there. Then second is use of AI to curb these cyber attacks, because if they are going to be using AI on to make these attacks, then we also need AI systems to preemptively stop these. So once that's done, I think it will be get better. But at this point, it's gotten worse over the last few years.
What are the other risks associated with AI and personal investing? We've spoken of some, of course, but what are the others?
See, I think the major one is the same. People over relying on AI systems. It's like a hook, right? Sometimes you just want that rush. You want, give me a recommendation. I want to buy something, right? It goes right, and then you go into that loop. People just go into that loop, and I'm sure, even if AI systems, let's say, yeah, they're not good, 50% of the time they will be right on average. And in general, markets on average go up, right, if you look at historical data. So on average, if someone makes a buy recommendation, they are expected to be right 80-85% of the time, right? So that gives people an image that, someone making a recommendation, especially when it comes to buy, that they're good. And that can happen with AI systems, and that can make people rely on them, ignore the warnings, right? And that's a huge risk, because when things go wrong, they can go wrong really fast,
Absolutely. And when you look into the future, Rohit, what do you think the future of AI in personal investing will look like? Let's take a window of 10 years.
I see again the same two things. One being all information available to people at fingertips, every single analysis, anything they need. So imagine a person who is in energy sector, right? So they have some understanding, okay, the demand for energy is going to increase. They have some understanding, but they don't understand the markets, how markets work, right? So this is the gap that AI can fill for them. And then with their specific understanding of that sector, combined with enhanced with the analysis that AI can provide for them, they can make better judgment call than the average market can do. The second is again the asset allocation, which I told you that is going to be disruptive. While it's going to take some time, a few years, but imagine the best wealth manager you can think of, financial planner, them working for the a random retail person, looking in all their finances, everything, and then making the best decision for them, right? That is what an AI system can and will do for people. So this is going to truly disrupt and revolutionize personal investing, personal finance for people, while we are away from it. But I think this is a huge opportunity space. I'm sure a lot of people are working on it. We are also a team of ours is also working on at least one part of the problem. So I think exciting times ahead, and let's see when people are able to truly crack it.
Do you think what are the costs associated with the use of AI in personal investing? Are there any costs at all, actually?
Yes. So see, building these models is exceedingly costly. As you might be seeing in news, someone raising $1 billion, it's not enough. Then again, raising $5 billion just to build models, improve them, right? Now, first models in the earlier versions of the models, it took around $10 million to build the first version. Now it takes billions of dollars with the sheer amount of data and processing required. So that there is that upfront cost. But there is another progress that's happening that is on vertical LM side, which I talked about. So people realize that you don't need such big models if you need very specific tasks. You can train smaller model on that specific task with the broader context, and it ends up performing similar and at times even better than a more generic model. So that is where the cost of training the model goes down. It also brings down the cost of running the model, because the bigger the model, then higher the cost of running it every time, right? Now, every time you query, it incurs a cost because you require GPUs and so on. But if you're running smaller quantized models, which are vertically focused, that is where the opportunity is there to cut down the cost drastically. Of course, that being said, today there is some cost, which is definitely not nominal, because if people are using it for hours, it will become significant. But the rate at which the cost is going, the technology advancing, and even on the hardware and both on the model side, I think in a year or two we'll see it become so less that it will become really accessible to most of the retail folks.
Right. So Rohit, tell us about ArthAlpha.
So at ArthAlpha, we are an investment management and technology firm. So we have two business verticals: investment management, where we manage assets for HNIs and family offices. We have a PMS, portfolio management scheme, a fund, which we launched recently. around 1.5 months back. And it's been doing decently. Before that, we are running the same strategy under advisory model, and we outperformed the market pretty by convincing margin. On our SaaS, on our technology side, we are building a SaaS platform. So we realize the demand for quant is growing in India, as you have also seen, probably noticed. So what has happened that before this, if you talked about AI 3-4 years back, right, even quant, people would be afraid it's a black box and they do not understand. But what ChatGPT has done, right, it has just made people realize, okay, if machine can do this, then it can probably do that as well. You can use an AI to improve the investment process, derive deeper insights, right? So suddenly people are more excited about the opportunity it presents. And because of that, a lot of these traditional houses, they want to incorporate quant strategies. Now there is a lack of talent, and also the initial cost is very high. So we are building a platform where that gives all these companies who want to build quant strategies an opportunity to do it at a much cheaper cost and at a much faster pace. So we are hoping to bring a quant revolution in India. Right now, quant in India is less than 5% of the total investable, total investments, while globally it's around 30-40%. So there's that bigger gap. And we hope to bridge that over the next few years.
So, Rohit, here's a question I ask all my guests at the end of the show. Why do you do this work?
There are two reasons, there's a very personal one. So both are personal, but in very different ways. I'll tell you both. See, from a ambition perspective, it's exciting for me that me sitting in a room with a system, I'm able to compete. I don't have to go out. I don't have to talk to people. I can compete with the best minds in the world in the market and beat them with just a system. Some of the biggest firms in the world, right? So that excites me, the idea of it, because you can see the results in real time. And being able to do consistently over years, that gives you that satisfaction. Okay, you are amongst the best in the world. There is another one, which is why, I took this journey way of starting up, right? Rather than, going in a big org and continuing there. Way back in around 2018. So a friend of mine asked me for recommendation that, okay, tell me which mutual fund to invest in. And I always avoid it, right? But he was very adamant. And then I said, okay, I analyzed, looked at the last performance, everything. I spent time. And after he bought, within a few months, he ended up making a huge loss. So I'm not trying to blame a mutual fund or this, but the challenge is with discretionary funds I realized, it's a lot dependent on one fund manager. If they leave, something changes, you can't predict it, right? So while people might talk about quant funds being black box, the problem is discretionary funds are black box. You can't exactly say how a human made a decision at any point. It's very hard. They might explain it, but there are 20 factors subconsciously they don't even know about, right? So it's much more easier to explain why a quant system. So I was already working in the quant industry and realized, wait, if this were a quant fund, I would not have made this mistake. I know that this is the behavior, this is how it's going to perform. I'm not saying it will not have made this loss, but not that big. And then that was the first point I realized, I want to do this. So 2019, I left my job, started in the space. But that time I was trying to do it alone. There's a lot of challenges and I ended up quitting. But then I met my current co-founder and he also shared the same passion. So then, we came together and decided, I think it's finally time, and the demand for quant was also growing. So in 2019, there was barely any investment in quant funds. No one knew what quant, no one wanted to put money in quant. But today people do. So we realized this is the opportunity. This is the time we do it.
Rohit, thanks so much for being on the show.
Thank you. It was nice being here. Lovely talking to you. And for the audience, if you want to know more about what we do and the products we offer, you can go to ArthAlpha.in, reach out to us, and we are happy to talk.
All Indians matter.